Okay, everyone, welcome to Black Men Speak. I'm your co-host, J.R. Stewart.
And I am your co host, Tommy Duncan. It is Wednesday night, July 13th, 2022. Jimmy, and if it's Wednesday night,
It's Black Men Speak. So let's give a big shout out to Liquid for providing our theme music and for Forest Films in our own studio for the virtual studio and some of the producing. And Tom, why don't you introduce our guest and tell us what, share the topic with everyone tonight. Before we do that, let's remind everyone to please hit that like button, subscribe to the channel if you haven't already, and please spread the word to others to be here every Wednesday night, 8 p.m. Central Time.
yes, sir. Ladies and gentlemen, we are very excited to have a returning guest, our good friend and brother, Edward Willis, who is a man of many talents. And we are going to focus on an area that is absolutely central to one of the common themes that we discuss, every week on Black Men Speak, and that is family and economy. We're going to talk about black banking and the Black community. Can Black America compete without a strong banking infrastructure? Again, can Black America compete without a strong Black banking infrastructure? How banking influences the Black family, Black wealth, and the Black economy. So we'd like to welcome you back, my good brother and friend, Edward Willis. How's everything been going?
Everything has been very hot.
I hear you.
Hot,
I hear
hot,
you.
hot. So business is hot. Um, all the different projects that I'm working on are in a stage where everything is really accelerating and the pressure is getting very hot for everybody that's involved. And of course, Dallas weather is hot. So that is the theme of July. Hot.
Yes. And by the way, folks, for those of you who may not have been here on the few occasions that Edward Willis has been here, he is the founder and CEO of Prospector Works. And before we get started into our conversation, we're going to ask Mr. Willis to tell us a little bit about Prospector Works, what it's all about, and then we will get into the core of our topic for this evening.
Well, I'm going to tell you, if you go to the website right now and look at Prospector Works, you're going to be misled. For the past roughly 6 years, we have been an advisor to registered investment advisors and other investment professionals across the United States. Everything from large firms to boutique 2 and 3 man firms across the country. In the last 6 months, we have totally changed our focus as a company. We are now an industrial agriculture company. Have started the process of growing hemp and bamboo in the eastern part of Texas, and we'll be expanding that particular operation as quickly as we can throughout the Southeast in co ops with African American farmers, as many of them as we can get to sign on the dotted line.
Okay.
Yeah.
Sounds like interesting stuff. We're going to definitely have to have a separate conversation about that because you're talking about an entirely or an emerging industry that has huge implications for this country and our community as well.
Oh, yeah. Big time.
So let's go ahead and move into the topic of conversation. I'm very excited as always. We always have these great conversations. One of the things, Jimmy, that we commonly talk about is the Black family, and we can't without talking about the Black economy because, of course, it is the nuclear cell of the Black economy.
True.
But when it comes to family, economy, wealth, and infrastructure, you can't have that conversation unless we start talking about banking, access to capital. Whether, folks, we're talking about buying a home, upgrading your home, unless if we're talking about starting a business, becoming an entrepreneur, or expanding the business that you currently have. Jimmy, we've had several conversations about the state of affairs in the Black economy and how to grow and expand that. So we want to have this nuts and bolts conversation so that we can learn or understand a little bit more about the banking industry, how it reflects where we are and where we're going. So why don't we start off as I yield the floor and hand the baton over to you to talk a little bit at the ground level about banking and the Black community. What give us a little bit of a general historical perspective of banking and the Black community, and then we'll go from there.
Now, you're directing that at Jimmy or myself?
Yourself.
Okay.
And I know Jimmy probably has some thoughts, and he's going to
Right.
definitely come into the conversation. But we'll start with you as our guest speaker.
Most of what I have to say historically is very anecdotal, because I've never really done a seriously deep dive on the African American bank, say from the 1870s through, say, the mid 1950s, when African American banks probably had their biggest period of growth and their biggest period of influence, simply because the civil rights movement and what came out of the civil rights movement was so disruptive that we really and truly live in a totally different age than when those banks existed. That those banks, when they existed, along with the growth of the African American church starting, say, in the 1870s, 1880s, those two entities together, and the fact that churches in many cases helped to fund educational institutions, that was the creation. Those three things together created the African American middle class and a lot of African American entrepreneurship, the discoveries by African Americans, both scientific discoveries, industrial discoveries, things of that nature, came as a result of those three entities working together: the education system, the banking system, and the religious system. And those three things were the underpinnings, with a burgeoning cultural awakening in the African American community, that basically were the foundation of making a very strong, in most cases, not all cases, but a very strong African American community. So the banks were lending, they were taking in money, obviously, from mostly craftsmen. I mean, you had people obviously working in farming industry, you had people working in industry, especially in the North, where they were working in mixed environments, usually as all African American teams in a particular part of a factory or whatever, but they were getting paid at a rate that was much higher than when they were sharecropping and doing small jobs. But you also had lawyers, doctors, grocery store owners, uh, haberdasheries, women's clothing stores as well. You had taxi services. You had everything flowing, and there had to be a place for the money. In many cases, they recognized, these citizens recognized, they could not take their money to a non-black bank and get the service they would get at a black bank. So their money piled in there. And in those particular cases, that money actually did rotate and never leave the community, or very rarely ever left the African American community, because it got loaned out to friends and relatives and church associates. Everybody knew everybody. It was true community banking. Everybody knew when somebody was building a new house. Everybody knew when somebody was expanding their business. Everybody knew was going to get the bank to get a loan. They knew pretty much how much money people had in the bank. All of these things, all the different stratas within that particular community were understood and agreed upon. There was very little conflict between, the upper class doctor and the middle class, shoe salesman and the lower class maid. Everything worked smoothly.
And so to put this in context about what period of time, because one thing that we want to make sure that we keep a pin on in context,
Mm-hmm.
you said something that was very important: money circulating within the Black community.
Right.
What period of time are we talking about here?
You're really talking about roughly about an 80-year period of time, say from the early to mid 1870s until probably the early to mid 1950s. So there are a couple of things that happened in the late 1940s into the mid 1950s. One of them obviously was the beginning of the civil rights movement. Another thing was the integration of the armed services. And now, African American soldiers being shoulder to shoulder with white, Hispanic, Asian soldiers, whatever the case may be, you know, especially in environments like Korea. So there began to be a different mindset amongst certain elements of the African American community about the ability or the viability, potential viability of being able to really and truly have full citizenship and full participation in the American economy, the American political scene, the American social scene, and all these things. So there began these tentative steps toward, well, I'm just like them type of attitude. So instead of going to the African American bank in my little town, I'm going to go across town or downtown, and I'm going to open an account at, whatever, name the bank, that is predominantly white. And, they're going to, if I have a bank account there, people are going to look at me differently. And that whole thing that continues to this day, this aspiration to be fully accepted and all that type of thing. So there began this mild drift, especially amongst the upper class and part of the middle class within our particular community, away from the traditional banking relationships. And that's something that probably nobody really saw coming at the volume that it came at, and what effect it would actually have upon the African American community as a whole, and what happened to the money that was earned in that community, and who was going to be recruited, because this actually happened, who was going to be recruited out of that community, and why they were recruited out of that community.
Makes sense, and I appreciate you providing that general Cliff Notes version of it, but I think it sets a very appropriate context for the foundation of our conversation. And the reason that is very important and instrumental that we have this conversation, because we talk about the relationship between banking institutions and any community. I mean, it's no different, for any particular community. In order for them to grow and to thrive, there has to be a banking infrastructure, because, quite frankly, you have to have access to capital. So if we talk to our listeners tonight, let's talk a little bit more about the relationship between banking and families, banking, of course, and business. And understand, everybody knows, typically that's going to be your store of income or surplus income, so to speak. You set up a banking relationship, you got to have some place to put in money from where you work. But when you look at it at a broader perspective, the influence that banking has on families, communities, the development of wealth, economy, what does that look like?
Well, you first have to look at banking as being, say, one of the four legs on a table. So you have to have education, sound education within your community. You have to have sound economics within your community. It helps to have a strong education foundation within your community. And it also helps to have stable, active, involved government within your community. So they all go hand in hand. The banking piece is critical, because banks become a store of value for the community. Those deposits that we talk about, those are stores of value that give capital to that particular community that particular bank serves. I mean, banks traditionally were set up to help to build communities. They weren't just depository institutions just to hold money. They were there to make sound decisions on how a community was going to grow. I mean, and in a lot of cases, they were founded by the, primary business owners in a particular community, whether that is, these communities in the West or the East. It doesn't matter. Prosperous farmers, ranchers, industrialists would get together and say, hey, we need a bank so that we can concentrate our money and really kind of have a plan of how we want to build out this particular community. Banks have a lot of influence in their decision making on what gets built, where it gets built, and at what interest rates and at what capital, lending limits are going to be available for those particular types of activities. So they, along with government in particular, are very important into what actually happens in the development of a community, or whether or not those communities are family friendly, whether they're more friendly to business, what type of business are they more friendly to, what type of activities, what type of culture, what type of laws, all of these things, all of that's influenced by capital, and government's influenced by capital, unfortunately, but it is. I mean, that's just a truism. So when banks start making decisions, if they're in a community and they start making decisions, they can determine whether or not and I'm just going to throw some numbers out, a 5,000 square foot supermarket is built or 1,500 square foot supermarket is built, of whether or not it's going to be a community of 2,500 square foot homes or a community of 4,500 square foot homes, and so on and so forth. Mixed use developments, whether or not there will be low income, moderate income apartments, or they're going to be expensive apartments. Financial institutions, banks in particular, have a lot to say about that because they make decisions on who gets loans for what. So that is just major when you start talking about families and family stability and a family's ability to grow and actually grow their capital base with their primary investments, especially their home, and the ability to go and borrow money to improve their home, which is an improvement, capital improvement, which long term means more financial security for them. Banks are intimately involved in all of that, and all the other decisions that banks make, whether or not they're going to put a smelter close to your neighborhood, affects the capital appreciation of your home, of whether or not government involved, of whether or not you have 4-lane roads running through your neighborhood or a narrow 2-lane road that is more family friendly, with wider sidewalks running through your neighborhood. This affects property values, and your major property, if you're like most Americans and you're a homeowner, is your home. You have a lot of capital tied up in your home that you can use for a lot of other purposes down the road that will also enhance your wealth, even paying for education, investing in yourself. You can do that with equity in your home. So, and which could continue to create more income for you. So banks are intricate. I mean, they're interwoven when they're there, and that's another thing I know we'll talk about, is whether or not banks are even going to be in our community, or whether they are currently in some communities. They play a huge, huge role in what that community looks like and what that community's future is.
Gotcha. So let's kind of, drive this conversation down a road a little bit. And we look at, I mean, obviously there are some areas of the country, so to speak, where you have very strong, thriving, Black communities. And Jimmy, we've talked about this on occasion, in the Northeast. I mean, obviously, if we look at the country as a whole, I mean, even though people may not think of this way, but the South at the beginning of the development of this country was really where the majority of the wealth was built in this country, and then it flowed up to the northern states where the harbors are. They shipped everything off. But if we look at Black communities today, and we talk about this in the context of the banking infrastructure in the latter part from the Reconstruction to the 1950s, and we look at where we are now. I remember, growing up, and of course, I'm from Dallas. I grew up in Dallas. There were a few banks, but not that many, so to speak, in our communities. We
Mhm.
look at sometimes a lack of development in Black communities. And I'm not talking
Mhm.
about mixed communities, but when we look at Black communities, there really
Right.
isn't a lot of development. There's not a lot of growth. And quite frankly, you can find liquor stores, you can find pawn shops, you can find plenty of churches there, but you're not going to really find that many banking institutions. What happened to the banking infrastructure over a period of time, and why are our communities so blighted? Why is there a lack of representation, of banking infrastructure in our communities?
One of the big things really goes back to land ownership and land use planning. And that, I mean, that's a whole 2-hour discussion, even if we were just to do a thumbnail of it. of who owns land that is available for these large developments. If you're gonna put in a Texas Instruments plant, who owns land that's available for that? When that particular decision was made, whose land was that sitting on? Well, it's probably sitting on some, European Americans families farm that they've had since, 1830 or something like that, just some open acreage that's out there that they may have had a few cattle or horses on, and there's some mesquite bushes, and they've sat on it and sat on it and sat on it, and that land is available. How were they able to accumulate that land over that hundred and whatever year period of time? Well, it's because laws were favorable to them, government was favorable to them, banks were favorable to them, of allowing them to borrow, in many cases borrow money on that land that had very little use, by simply attaching a value to that land, that if that land had been in another part of town, another part of the county, let us say, and that land had been owned by an African American or Hispanic individual, that land would have carried a much lower value. Same exact land, looking exactly the same way, with the same animals on it, and the same trees, and the same creek running through it. That's just reality. Those things have always happened, and the ability to use that land and sell off pieces of that land to pay property taxes and things like that. Education factored into some of those decisions. Not to know how to deal with that, and pieces of land were lost here, there, and the other, with African American landowners. In many cases, African Americans did not have a long view of holding large parcels of land, of what that value may be in the future. And they may have, in many cases, I know of several cases where the land was sold off very cheaply,
Mhm.
in regard to what it was probably truly worth. And that's simply a lack of knowledge, a lack of education, and a lack of really foresight to understand the direction that your state, even your county or your state or the nation's going, and what the needs are going to be, and how you have a place in that. And for a long period of time, a lot of our forebears did not fully see that they had a long-term place in the future of the United States of America.
So
So,
if I'm getting you, I'm kind of interpreting and
mhm,
maybe getting ahead of where you're going. If we look, because we talked about, and you spoke specifically about civil rights
right,
and integration.
yep,
And when we go from the 60s and 70s and we look at the civil rights legislation, the civil rights legislation, and then you saw, for lack of a better term, what's the appropriate way to say it? A large part of the middle class or the
hmm,
wealthy in the Black community move away from the traditional Black communities into white neighborhoods.
right,
Um, I guess what they used to call white flight. When Black folks move in, you had Black flight after integration. And so,
sure.
am I to assume, maybe I'm wrong, correct me, does that mean that with that brain drain from the professional class, the middle class, the wealthy from Black communities, where legally they were separated from mainstream America, that money and those deposits and those opportunities went with them? And so that, in essence, began to ravel away at the Black banking institutions, or is there something else?
Well, that's part of it. So understand that in many cases, those individuals were recruited away from the community.
Right.
Right? They were enticed. Hey, you should move out to whatever Forest Lane or whatever the case may be. There's new housing development out there. I think for you and your wife, or you and your husband, this would be a great opportunity. Those land values are going to continue to grow up. It'd be a great investment for you. And all of that was true. And if you're a married man with children, and you have an opportunity to invest your hard earned dollars into a property that is going to accelerate in value, why would you pass that up? Right? I mean, those particular individuals who took those opportunities and it's paid off for them over the years, you can't really fault them. The other thing I'll say is that in many cases, those individuals who moved out of their traditional neighborhoods to, those other so-called greener pastures, they continue to go back across town and go to their local church on Sunday, and prayer meetings on Wednesdays and all those type things. They can continue to participate like that. So in that particular case, there was not necessarily a drain of brain power or encouragement or any of those things. If they were teaching at, say, since you're from Dallas, if they were teaching at Lincoln, they probably continue to teach at Lincoln,
Mm.
right? They didn't change and start teaching at Hillcrest or something like that. They were still at Lincoln. They just lived in a different neighborhood when they went home. So what happened as a result of that, though, is in the
Yes.
banking community,
There we go.
they look at these algorithms, right, of where income is. And you look at rooftops and you look at average income and all these things, and you start making decisions on whether or not you actually need a presence there. So when your high earning people in neighborhoods start leaving those neighborhoods, there is less of an enticement for a bank that is ruled by stockholders, 1,200 miles away,
Mm.
to stay and participate in those neighborhoods.
But in this case, we're talking about black banks that
Well,
was supported by black communities.
I understand it. There weren't that many black banks, number one.
Mm.
Number two is when you start making money within your community. And I don't care what race you are, what culture you're from. When you start making money within your community, every financial institution that can reach out to you will reach out to you. And a lot of their offers are extremely enticing. So when we started making more income and we started developing again for the second time, or maybe even the third time in our genesis in this country, a strong middle class, all the financial institutions that had overlooked the African American community came calling. All the Merrill Lynch's and what is the ones that used to say, I forget, all of the investment firms, all the insurance companies that never came down to see you, they were now hiring African American female, male and female insurance agents to come knock on your door. They were never there before, but now there's enough income and enough rooftops for them to come down and start making inroads into those particular communities. And in many cases, they were doing it with products and services that African American institutions were not prepared to match. They were just offering better products and services. And for a time, they'll give you sweetened rates, even on loans. They become extremely competitive on lending to you because they want to sweep away the cream of the crop and make them their customers. But they're only going to take a few. Their algorithms basically tell them that every time they make a loan into that particular pool of people, that the next loan that they make needs to be adjusted so the interest rates fractionally higher. And it just keeps going like that until they hit a limit that says that's enough. We're gonna have to start turning down loans in this particular community. We've done enough there. We got enough exposure there. That's their language. We have enough exposure there. That
What do you
starts
think?
to happen.
Go ahead.
No, I'm saying that starts to happen at the same time. If I'm lending you money, if I'm what was Republic Bank back in the day, if I'm Republic Bank and all of a sudden I start lending money in Oak Cliff and South Dallas, I want you making deposits in my bank. So let's say you've been at a little black bank in South Dallas or Oak Cliff, but you're going to come to me for loans now. Do you have an account here? Well, we're more than happy to give you a loan, but we want you to open an account. We'd like your account to be a minimum X number of dollars. So, all of that goes hand in hand. So they're pulling money out of the black banks, putting it into non-black banks. I'm not going to say white bank, though I just said it, but they're
Right.
putting money into those banks so that they can get these little favorable things, and they can say, I got a loan from Republic Bank, and makes you feel good. It makes you think that you're a part of the whole cloth and all that type of thing. It's very subtle psychology. It works.
But it works though.
It works extremely well.
Um, the mathematical models that you talk about,
Hmm.
they spend millions, if not billions, throughout history to figure those things out.
Yes, they do.
So it's not an accurate science, but it's fairly close. Like you
It's
said,
really good.
they know when their risk has gotten too high and when to stop. And you're right, they gradually adjust costs to cover their risk until the risk becomes too much or it costs too much. I mean, there's a point that people just can't afford to pay for that kind of risk that the banks don't want to take on. So you're right. So it works itself out eventually.
Right.
But you're right. But in the end, they end up with the cream of the crop of those that they want to pull away, and the rest they don't care about that business anyway. Because, like you said, you don't have money invested in my bank anyway.
Right.
You're cashing your check at the check cashing place rather than depositing your check in one of my branches. So what do I care?
I mean, all that what you just said is true. I know the models that they use. These have been studied extensively.
Yes.
They've been talked about over and over again. It's like, my dad used to say that there's not a conspiracy if everybody knows about it. Everybody knows this. I mean,
Mhm.
everybody that wants to know this information knows this information. That they have these models set up, these Bayesian theories, and all these algorithms that they
Yes.
use. Everybody knows that they use them. Everybody in the banking community knows to the extent that they are flawed, right?
All right.
But I will tell you from personal experience, because I'm working with a group of people that is opening a credit union, is that in sitting down and talking with the software professionals that you have to work with to be a part of the banking community, basically interviewing them, having them interview us, is that platforms that the banks run on, uh, these legacy platforms that a lot of them run on, they know, they personally know that their platforms for decision making are way out of line with today's individual, whether no matter the race or culture of that individual. They're just so far out of line, but it is cost prohibitive for them
True.
to change those platforms. It is so expensive. I was shocked
So let me
of
ask you
how
this.
much it would actually cost.
So for someone who's out there listening, who is let's say just everyday working, mom, dad with children, or even an entrepreneur. I mean, they could be a
Mhm.
CPA, they could be a landscaper. Why should they care? What's the big deal?
Well, the big deal is that if they want to make a better life for themselves, and if they have children, if they have a wife, even, this is one of the more important avenues or aspects of their life that they'll ever touch. Because incrementally, the more that you have to pay for the use of money impacts the ability for you to
Right.
accumulate capital, right? And it is so incremental that if you're not paying attention, it will have devoured you and you won't even know that it's happened.
How
You
would
know,
they know? Because we're not talking interest rates here, or are we? What are we talking
well,
about?
you are talking
You are talking interest rates,
interest
Tom.
rates.
Okay,
You're talking
gotcha.
interest rates. You're talking access to money. Period.
Okay,
I mean, the big thing. Let's start with just access to money. Where do you have
absolutely.
to? Where do you have to go? I mean,
The
every
bank,
time that you want to do something, you want to put a deck out back of your house.
right?
Where do you go? You have to go to these finance companies, or do you have to go to a pawn shop and take jewelry and to get money to buy the materials to build your deck? Or, can you actually go to your bank or whatever and get the money? And if they do say that they'll loan you some money, how much are you paying for that money and over what period of time, and what are the covenants that are in the loan document, and all these different types of things that people don't think about this all becomes extremely important. And we're not even, again, talking about the governmental aspect of it that creates homeowners associations and, the permitting that you have to pay for and all these things. Where's all this money coming from for you to accumulate more capital, either through your property or through some other means, right? And in many cases, people who had prior bad experience with banks, but now they're on their feet as far as employment, their profession and things, they can't even go get a bank account. They can't even go get a bank account. They got to hope that they are employed by somebody that has a credit union, which they can automatically join, right?
Right.
So,
Because they had a bad experience before, they bounced some checks, whatever, they're blacklisted for 5 to 7 years.
gotcha. So before I ask you these next couple of questions, as we kind of go into the back half of our show, and we want to remind our listeners tonight, more than welcome to call in if you have any questions, 972-497-2280. If you just joined the show recently, of course, please like, subscribe, share this information if you find it interesting to other folks who might be interested. So if we get into the back half of this conversation and we talk about banking and the ability or inability, and we're talking about the Black community in particular, to compete in your community, in our communities, in this country, the relationship with banking is absolutely critical. The question, can the Black community compete without a strong Black banking infrastructure? Because, I mean, we know, if we've been paying attention to what's been going on, with Wells Fargo and Chase and a lot of other banks, in terms of, we'll take your money. Loan it, maybe. Yeah, I'm not exactly sure, what that's looking like today. And so, if we realistically somehow think that they're going to roll over and out of the goodness of their heart, say, you know what, we've been wrong. We've been taking your money for all these years, even decades, and we're going to just start, loaning it to you because, we're going to normalize this thing. I don't know if that's going to happen, Edward. And so, is the only answer building a stronger Black banking infrastructure? What does that look like? And what is it that we need to do?
Well, number one, that's your only answer. And I'm going to give you like 90 seconds of why. If you have noticed anything about the banking powers in this country and the tightening restrictions on them as far as things like overdraft fees and different things like that, they're starting to cannibalize each other by not charging overdraft fees and not charging fees for this or not charging fees for that. That cuts into their income. That's easy. All that stuff is easy money, right? So
Yes, easy
when
money.
they start giving up easy money like that, they are going to start looking to make money in other ways. And one of those ways that they make money is not by loaning money out to anybody that they consider the slightest bit risky. They become very tight with their lending. I mean, extremely tight with their lending, extremely tight with branches that they open, whether or not those branches are populated by people, all these type things, a lot of different cuts. So that depersonalizes the banking relationship even further. There's nobody for you to talk to. There's nobody for you to get to know so that they understand that your little flower shop that you opened 3 years ago is growing. It's just growing and growing and growing. And you need to really be able to work with a personal banker to be able to manage all this stuff and have proper growth and maybe move into a market in Frisco and, a market out in Colleyville and all these things because you've got a handle on this. You know how to run this business. There's nobody for you to talk to. There's nobody that
And
wants to get to know you.
Well, but
right,
you know what? But you still need to find a way. Despite that, it does help to have a personal relationship with your banking manager, to be able to know them by name, to be able to have a relationship with them. Because there'll be times that you need to sit down and talk to someone who's in the know that can maybe
Right.
advise you. Maybe they can't solve your problem today, but at least maybe they can help you navigate the sharky waters so you don't get eaten up by the sharks.
No, you're 100% right. The problem is that there are very few of those.
Yes.
They just don't have the raw numbers at banks in a city or an area that's growing as fast as Dallas Fort Worth, for example. Just the raw numbers of people inside the bank to be able to help you, they just don't have the numbers.
and
And
I'm
then
And their
and then
time
Edward,
the
is
other thing.
Go
the
ahead.
other thing, we're talking about the black banks.
Hmm.
Understand that the banks are in the business, like all business should be, to make money. I
Correct.
mean, they're not there for social outreach. They're not there for race relations. They, especially if they answer the stockholders, their primary goal, all the stockholders want is a return on their investment. They
One
don't
of
care
the
about
one
nothing
one
else.
one of the things that I always advise people to read is go read the banking charter and the purpose what the purpose of banks is.
And these banks are heavily regulated by the government.
They
You
are
have
heavily regulated, but
banking
you know
inspectors will come
something,
in to make sure that you're running this bank in a
right?
manner that the is outlined by the government. So there's some situations that you can't take on too much risk. There's
Right,
only so much. You have
right,
to have so much money in cash deposits.
right.
So many you can only have so many loans against that. And last time I heard, the federal government is actually making banks buy their U.S. Treasury notes. Yeah, they have so many of those in deposit. So you can't even take your profit and do what you want with it when the federal government has their hand in your pocket, dictating how you spend your money. Sometimes, but with that being said, the whole to me, the whole relationship between banks and people and families is built on what we used to have was trust in each other. You used to be able to shake a hand and say, "I'll pay you back," and that was enough for some people. You don't have that anymore. You have contracts now. You have credit reports. You have people trying to figure out just how much risk am I taking on by loaning you this money. And sometimes you are perfectly fine, but you could be in the wrong zip code. Everyone around you, is a risk, and they look at you and say, okay, well, you surrounded by that many bad rich people, it's only a matter of time before their habits become your habit. You may be paying your bills now on small things, but if I give you a 30-year mortgage, you really gonna do the right thing for the next 30 years. Uh, so we need to understand that there's a lot of things we have to do internally if we expect other people and other institutions to look at us differently. Right now, I think if you just had to ask someone outside of zip codes and geography, just overall, are black people loan trustworthy? And if they answer you honestly, I would think most people in the banking industry would just say probably not. I don't know that many black people, but I would say collectively overall, they're probably not, and that doesn't make them racist. That just means they don't know very much about black people. And then what they do know is based on all those models and algorithms that they're running and all that data they look at that say, hey, some of these areas where black people live, we just can't make loans. We can't do business there, period.
Well, Jimmy,
And
I'm gonna
so that
go ahead.
reflects on all black people, not just the ones in that zip code in that area.
Right. So the
Well,
solution to that, Jimmy, is black banks.
I agree. And I
Yes.
don't know why we're not popping up with, especially with the credit unions, why we're not popping up with a credit union every month around this country to alleviate that problem.
Part of
Just seem
it,
like
part of the reason is there's the process that you go through to actually get chartered, whether you're
okay,
getting chartered as a community bank or a credit union, or I'm sure even just a regular FDIC bank is a lengthy process because you are going to be handling money that belongs to the public. So they want to make sure that you are properly vetted to be able to do that, and that everybody there is trustworthy and all these type things. But the other side of the coin of why they don't exist or why more of them don't exist. I think there are 20. I think that's a fairly the link that I put in today. I think there are 20 African
okay,
American controlled banks in the United States of America, which is ridiculous. There should be 20 of those in New York City alone. There are
how,
20 in the entire country.
so
That's
I mean,
banks and credit unions together. So
mm,
wait, back up.
trust is the biggest issue that I personally have dealt with in the process of moving Graceline Federal Credit Union along. We have lost the ability to trust each other.
brother Elwood, speak on that, man. You
One,
gotta.
that's one,
We
one
can't
that's one.
glaze over that. That is so important. So
I,
please
it's another
elaborate.
show. No, it really what's happened in communities and specifically time tonight is that we engaged in commerce. We've joined together in commerce with each other, and we've had fraud at very scales. Even in Dallas, Texas, with an African bank in Oak Sun Belt, great amount of bank causes failure. Dealing, lots of friends and families, bad, just this particular operation and our lack of, in many cases, integrity when those positions power and trust have eroded a lot of confidence in each other, actually handle large problems, whether that's at colleges, banks, whether that's large business operations. In Comer Cottrell, same thing. Tremendous amount of problems, money management, not knowing where money is going and type of thing. We have to start this process of building trust with the community. Tommy, the other mentioned you Rousseau's book, about defining the social contract, to redefine the social contract within our own. Right? We have a contract within our community behavior, what is going to be and accepted and what is not. So we start these processes like I'm working of creating any institution is there has to be total transparency. You have to have who are character, who are of those processes, institutions, have to be held accountable at every level of development and
Sure.
management institutions as they can. We have a building there with every one of the things that uphold culture in our community. That also affects that we interact with things from our existence to our educational to people that we choose to government. That's no issue. People that we're choosing, the people that we're by, the people that we were in charge of making decisions for us. So banking piece big, and there's a lot of credit unions are monetized. They serve specific people. Credit unions are not, by the way, incentive is not there with traditional banks to make enough your doors open, but trying to report to that you were up this quarter and all that. And credit unions don't run into that. So credit is more about back into the community that they serve.
Right. So credit unions are a little closer to the people that they serve. So I'll give you that.
Right.
And so, Tom, I think Brother Edwards was we were starting to talk about trust, and you were wanting to back up and rewind something else he said. So if you haven't forgotten what you were going to ask, go ahead and run that by Brother Edwards.
Right. And there were a couple of things that I don't know if it was on my side or his side. It was starting to break up a little bit.
Yeah, the signal's a little weak from Brother Edwards' side. I'm monitoring it now.
I didn't know if it was just me on my side or him.
Okay.
I was able to catch it, but it was probably every few words, and so I was definitely missing a part of it. But I think the area that he was talking about that I wanted to kind of dig on, and we don't have a lot of time. We have a little bit less than 10 minutes, but he talked a little bit about trust, and I think that's probably the most important thing. And Jimmy,
Right.
we've talked about this. Matter of fact, we just talked about it a couple of days ago, a code of conduct.
Yes.
One thing that he said that was very intriguing to me, and you mentioned it, I'm going to take a note out of your playbook, Jimmy, in terms of banks' ability to trust folks within our community, whether that's getting a loan for a home or that is getting a loan to start or even expand a business. At the end of the day, Malcolm said this very best. We have to change the way that we think about ourselves in order to get a different result.
Absolutely true.
And then that actually takes them out of the equation and puts us in a position to be able to build our own institutions and our equity. But the part that he was saying, Brother Ed, is very important. We've got to get to a point where we can trust each other and build that type of equity in order to get those types of results.
Well, and plus, Tom, your word has to mean something. I mean, really, what is a credit report? A credit report is simply measuring your ability to keep your word. I'm going to give you this money, and you're going to pay me back so much each month or each week or whatever the period is in the terms of the agreement. You are giving your word to someone that this is what you're going to do. And so you don't do that, you're now violated your word. That credit report is just measuring your ability to keep your word and honor your word. People who do it well have a high credit score. People who don't do it well, and this is no reflection on the bank. You can say, well, the banks are redlining, they don't do this, which all that may be true. But it's not like they don't have mitigating reasons to do what they do. And sometimes I don't think it's all that personal now. It could have been 50 years ago. But now I think people just want to make money. And if they can make it down in South Dallas because everybody down there is repaying their loans, trust me, there'll be banks popping up all over the black area.
I don't know, Jimmy. I don't know
Well,
about that.
Tom, look at what
Now,
happened in the
Jimmy,
Asian community.
Well, I
Jimmy,
understand that, Jimmy.
you're a little bit on that, because one of the things you notice when you go into the community owns the banks, banking with, own their banks,
Yes, they
start
do.
their own banks.
That's correct. The Asian
Right?
community here in
So
Plano, Richardson is a
they
prime
have
example.
intimate knowledge of each other's businesses because they all invest in each other's businesses.
True.
It's very rare that you Asian-owned bank that actually have 15 to 20 investors. Those investors are other business. All of those investors probably are investors in a bank that loans money to those to grow and expand. They've got it down to a science.
I agree.
They know what they're doing, and wish we had another hour. Those community better. I know the Chinese or Chinese things like that. To honor your family, repaying a you can't owned.
Yeah, I think your signal
The
is
way
degraded, Brother Edward.
context. Oh, I'm sorry.
You were saying
Tell me.
something about honoring the family, so you kind of cut out that point.
Yeah, in the politics in the community, if you do something like not debt, you might as well not even go home.
Hmm. That's some
Contract with,
social power pressure for you.
yeah, exactly. That is part of the contract within their community.
I agree.
Simply don't dis family by dishonor word or what. You find. But the
Well,
other
see,
thing,
Brother Edwards, that's what I wish we had. I wish we had something like that. We used to not
we can
allow
get it.
young girls to be knocked up before they were married. You'd have to leave town if that happened. When you came back, that child was 10 years old. You claim the father died in the war or something. But now it just seems like everything goes. There's no social shame in our community. And so I wish we had that. I wish if I didn't pay my loan, oh, we lost Brother Edwards. Hopefully he'll come back.
We can continue the conversation. He'll come back.
Yeah, I hope if I didn't do right by the bank, which means they can't do right by someone else, and yeah, I should be called out on it. I should. Hopefully, that's him joining. So yeah, I wish we had more of that here. There you go. Well, nice strong signal this time. Oh,
Okay, good.
Jimmy.
hmm?
Keep going. You were
But
saying.
no, Jimmy.
Oh no, I was just
You're
saying I wish we
100%
had that. I wish we had
right.
more accountability to each other because it's important that if I take money out of the bank, I'm taking money from everyone else a little bit, and if I pay it back, that bank can use that money to pay the loan out to somebody else. We all benefit. But when I don't pay it back,
Right.
I'm not just hurting the bank. I'm hurting my whole community, and we don't look at it that way. We just they got plenty of money. They don't need my money. So what if I don't pay it back? Well, it's that so what I don't pay it back attitude that the banks are trying to track and figure out who has and who don't.
Well, part we do, and it's going to be a big piece forward with even the traditional banks. There has to be a application process, a application process that you should be making loans to people that don't and their response. is that they haven't vetted and educated so that they actually understand what they're taking. So one of our tenets is not, we won't ever make a loan to somebody that has not participated in the class, understands how, understands instruments, and do you have insurance on your home, insurance policy? I mean, all of the things that they everything that they're responsible for, that could really impact. They're the most person in the world. They got the best heart in the world. If you don't understand how things impact you financially,
Correct.
that will cause you to fail, you're not protected. People have to be, and there's so many in our community who are successful in what they do that really understand how economics and the system works in the country, and they get excited. They don't even. There were so many people that we couldn't get a PPP. They had no book. They had no terms that were legit returns even. Go to the bank and get a business owner if you don't have this paperwork, for several places where people see what you're doing, about tracking your and expense and all of these, understanding on they affect you, how to deal with that, and there's a lack of preparation. That too, lack of trust with each other about money. I won't tell you how much money I make or what is doing, because I trust that you won't put all this in the street. Talking to my CPA.
Well, let me ask you this, Brother Edwards.
Down in our community.
So, not to cut you off, we only have a couple of minutes left, and I'd like to get this last question in. Do you think we use racism as a shield to avoid those things and doing what we have to do, like you just talked about? To be financial savvy when you go in to ask for a loan, or even just managing your money well, because like you said, these things have long-term consequence. We don't forget very much these days. Everything is tracked somewhere.
That's an easy to say. Racism is a part of what's called red, for example. Racism is a part of redlining, but race is not the only in why loans aren't being made. Because as you said earlier, banks like to lend money where they make money.
Even if they don't like you, some people like to make money.
Even if they don't like you. Even like you said, don't let your money will make that money. But the lack of community, the lack of community, and the lack of viable option community for accessing capital major. The more choice you have, the more opportunity you have to sit down with a banker, the more savvy you become what banks require you to be able to do business or on a wing or new car or whatever. More opportunity to do that. You're going to get it that way. I'm just simply saying that we should better educate before we even take that first step.
I agree. And I think
Start
Black men need to be leading the charge on this process and with their families, with their kids.
Black men, black mothers. A lot of times, I don't know about you guys, my mother did the books in our house. She checked the checkbook. And it was balanced. It was never a penny off. She was
like
better.
Your mom could have been a CPA.
Put it that way.
Well, you're right. Whoever in the family is the best at it, and sometimes women are more detailed and pay attention to it closer. But we need to start teaching our children about money and consequence of mismanagement of money and the long-term consequence of that. So you could be paying for it, like you said, even if you're extended credit. If you're paying 30%, 29%, whatever the maximum by law is, and someone else is paying 3 or 4, then how in the world are you going to keep up with them when you're paying that much more for money than they are?
Compete with them.
Yes.
compete with them. They could be making $25,000 a year less than you. But as far as technically and appreciation, they're going to bypass it.
True.
They're going to have than you in a 10-year time, much more. Because of those. And you don't understand that enough people in our those numbers work and how they end long term.
Well, Brother Edwards, we're
You
going
just
to
don't.
thank you for the work that you're doing. And we really, really wish you much success in opening this credit union. And hopefully, there are other people who are watching that will reach out to you if they need help with the process also. Maybe they can bring you on as a consultant since you've gone through the process to advise. But we do need a lot more of our own financial infrastructure in place around the country and every large metropolitan area where Black people live. So we can start the process of getting control of our economy. And
Mm-hmm.
without banks, credit unions, financial centers, um, insurance agencies, we're never ever going to catch up. And this is just going to be a futile game of just repetitive talk about our problems. But eventually, at some point, we're going to have to solve this problem. We're going to start doing, and you're already out there doing on the front line. So we're going to challenge others to do the same thing. If you never thought about a credit union or trying to open a bank, get a group together and start thinking about it. Explore and see what happens. But yeah, definitely reach out to Brother Edwards here if you have questions. And Tommy, do we have Brother Edwards' number or information? Do we
What
have permission to post it on the in the video description or?
Yeah, what is the best way for folks to contact you, Edward?
I would say probably email address. If you want, I can chat if you want me to, and just give it to you guys.
Yes.
Distribute it as
Yeah, if you don't mind, if we could, put it in there, we'll put it in the description tomorrow for the video for
Okay.
people to
All
they
right.
can go there and get it. So
And is this your 1979 address, or is there another address?
The business address, and this is the best one too for people
Okay, Edward
reaching out to
W.
us,
at
especially
Prospector
during the day.
Works. Is that
Yeah,
the
Edward
Edward W? Okay,
Prospector. Yes.
okay, give me just a second.
and now you're going to have to come back and tell us about this hemp because I'm curious about that. I mean, yeah, I know my wife sells some products that uses some hemp oil, and I know there are lots of
No,
different things that you
Jimmy,
can do
this
with
is
hemp,
this is more
clothes,
industrial.
and
When I
okay,
say industrial, for building
okay,
buildings, it's not concrete. I don't know that term, but it's an alternative. It's retardant. It's much better as far as climate change. It's cool. It keeps you. Doesn't have those issues of concrete,
okay,
and it's some states military actively looking at my interest.
got it. Okay, Tom, we're a little bit past the top of the hour, so do you want to close us out with a prayer, or do you want to go to closing theme music?
Why don't we go ahead and go to the closing theme music, because we know we are a couple of minutes into the top of the hour.
Okay, we want to thank everyone who watched the show tonight. Please come back, and like you said, if you haven't already hit that like button or subscribe to our channel, and please share the words. Spread the word and let other people know that we're here every Wednesday, 8 p.m. Central Time. This is a place where you come to learn on what's going on in the Black community, but more importantly, this is where you come to find the solutions. Because we're all about doing stuff here, not just talking about it. And like Keisha Jones say, we're not for play.